Here's Jeremy. I'm SwissBorg CFO, and I'm here to explain to you why today is the perfect nexus, why this is a defining opportunity of our lifetime, and why it's so fucking awesome to have this opportunity in front of us. Let's look at what's happening with the crypto space from two angles. The first one is the secular trend. What is fantastic is that we are still very early. Indeed, if we plot the trend of adoption of crypto with the trend of adoption of internet, you can look that we are around 1999. The chart is not completely updated, but nevertheless, the trend has been confirmed in 2022 and in 2023. This shows that if you do an extrapolation, that we are in the very early days still of the crypto adoption. We are not many around the world yet to be part of the crypto revolution, but more and more people will come. As I was saying, the size of the market is still very, very small. If you look at the size of Bitcoin compared to Amazon, or the size of cryptocurrencies as a whole compared to US stocks or even US treasury bonds, and this is only one country, you can see that the size of the market is tiny. Also, to give you an additional point on how the adoption is super strong, is like in 2022, when the market fell 80% in prices, the user grew 40%. It is very little markets that when they are falling like that the adoption continues. And this for us is a very positive point of the fact that adoption is continuing. The forecast we've been able to extrapolate throughout the various researches we've done for the total market cap of cryptocurrencies will be roughly 14 trillion in 5 years. As you know, what we see is the current ecosystems, the current coins growing, Bitcoin, ETH, Solana, and all multiple others, but as well, new ecosystems that are going to come and that going to be built, and as well, what we call the monetization of everything through tokenization of real world assets, as you have probably heard about, and as well, the usage of NFT technology for ticketing, CBDCs, the NFT technology used for derivatives, etc., etc., etc. We know that cryptocurrencies will be more and more used for the technology, the tokenization technology will be more and more used and will enable the total market cap to continue to grow. As well on the secular trend, and this is something that is super important for us, it's the first time that everybody can be before smart money, before the institutions. Why is that possible? It's because it's accessible for everyone, because you can buy it in either a small amount or large amount. It's fractionable. You can buy 100 francs or you can buy 10 million of Bitcoin. Everybody can access it. And this is what made it super, super, super interesting for all of us. Which is even more fantastic is that we are still before the institutions. The ETFs that everybody are talking about have not been yet approved. And therefore, institutions and money from institutions have not flooded the market yet. They are starting to come. We are seeing signs, but we are still before them. And positioning ourselves in this market, in this current market, is front-running the institutions, which is a fantastic play. Finally, the secular trend, when you look at technology, on the left chart, you have the NASDAQ on the logarithmic scale, and on the right chart, you have the Bitcoin as well on the log chart to show the secular trend of these markets or of these technologies. Unless we believe that we're going back to caveman age. Technology will continue to grow. Innovation will continue to grow with the combination of AI, robotics, IoTs, renewable energy, and everything you can think of. We know that technology is going to be more and more part of our life, and that this secular trend is going to continue. And crypto is completely part of this secular trend. Now that we looked at the secular trend, I would like us to look at the cyclical nexus, which makes this the perfect nexus. From a cyclical point of view, there's two forces that coincide, and we will explain why in more details after. The first one is the cyclical nexus of the halving. Halving is the rewards of Bitcoin that are divided by 2 every 4 years. That's by design. Every 4 years, the rewards for miners are cut by 50%. And as well, and we will explain why in a few moments, debt maturities have an average maturity of 4 years. These are both equally important. Without the halvings, Bitcoin would not have been the scarce asset it is today. And without the liquidity cycles, fiat assets would not be worthless as they are today. So why are debt maturities in average 4 years? If we look back at the time in 2009, when we were in the great financial crisis, the entire planet reset the interest rates to 0. Why did the governments do that? Is because the banking sector and the financial sector was on the verge of collapse, and central banks had to intervene. So what they did, they put all the interest rates to 0, but on their balance sheet, all the toxic assets, the CDOs and all the subprime assets that banks and insurance funds and whatever other financial institutions had on their balance sheet, they took it on theirs to re-inject liquidity. And as the rates were at 0 at that time, the entire planet refinanced itself at 0 interest rates with an average maturity between 3 to 5 years. Therefore, we find the 4-year cycle back, as explained before. This coincides with the halving, and this therefore pushes asset price up and crypto assets even more. What will happen in 2024? We are strong believers that in 2024, liquidity injections will continue. Why? It's because as average maturities are 4 years, we have liquidity cycles that are in average 4 years. What happened 4 years ago? If we remember, it was the COVID pandemic, and the world printed like they never did before. And now that the maturity of this debt is arriving in 2024 at maturity, governments don't have any other choice than to monetize the interest by taking it on the balance sheets of the central banks, because states are in debt of more than 100% for most of them, and therefore there's no way they can pay for the interest. So central banks will monetize the interest of the debt by taking it on the balance sheet and injecting liquidity, therefore debasing the currency. And as well, the debt will have to be rolled over. So the amount of debt of COVID will have to be rolled over in 2024 because governments can't reimburse this debt. There's no government that will take the risk to increase eventually the taxes to pay this debt or cut spendings. This is absolutely suicidal from a political standpoint. Therefore, this debt will be rolled, and therefore the market needs to be capable of absorbing it. What the market will absorb, at what rates, this is yet to be seen, but we believe that central banks will cut rates for the states to be able to hold this debt, to refinance this debt at levels that are lower than today, because it's not sustainable from a fiscal point of view. And if they are not capable of lowering the interest rates enough, probably they will do what we call yield curve control. They will put it on their balance sheet by being the buyer of last resort. 2024, therefore, will be more liquidity, more stimulus, and therefore very positive for assets in general and for crypto even more. Here on this chart, Bitcoin is very sensitive to liquidity. Just to give you one statistic, for 1 unit of liquidity injected in the system, gold goes up 1 unit and crypto goes up 5 units. This has been experienced again through 2023. Just for you to know, in 2023, around the world, central banks have injected liquidities, even if they were saying that they were doing quantitative tightening. The Fed injected liquidities to save the banking sector in the US with SVB crisis. The Japanese did yield curve control to control their yen and their GB, the debt they have. And for example, the Bank of China has injected liquidity to stimulate their economy. This graph shows as well, as you can see, very easily the correlation between the global liquidity and the prices of the total market cap of crypto. And as you can see, liquidity is rising and crypto will continue to rise throughout 2024. On this chart, it's just an additional chart to show you the correlation and strong correlation between technological stocks that compose the Nasdaq and the liquidity injections that are happening around the globe. You can see that 97% correlation exists, and cryptos are part of the tech trend and therefore beneficiate from that correlation as well. And finally, why it is so important to expose yourself today to assets, and even better to assets that go quicker than the debasement of currency or the increase in the balance sheet of central banks. It's because with the continuous monetary debasement the world is experimenting and will continue to experiment or experience, we will see the gap, the wealth gap widening due to the fact that asset prices go up when capital injections are made and liquidity injections are made, and scarce assets that have an adoption go up even more. That's why having an exposition to crypto and entering crypto now enables you to start to create a wealth that we believe will be meaningful in the future, because it enables you to go quicker than the monetary debasement and therefore hedge yourself against monetary debasement. Thank you very much for listening. Have a great evening. Bye-bye.